Good morning, everybody. Well, we did finally get the beginnings of a turn day, which what we thought might have happened day before yesterday, but clearly it didn't. It was a continued push up, even though prices were up at the top of these pivot highs, pushed up to new all-time highs, holiday time, all that bullish seasonality. Um, Now we've got this momentum move higher. Now, yesterday we talked about the void that momentum move higher created. And we've got the sideways consolidation. And you can see this kind of really looks, it's taken on the look of like a head and shoulders top, which is, a distribution pattern that can happen in many different ways. You can see here, and this is kind of got the extra little blip there to come up. It has not violated what's called the neckline, which then leaves what was support to become resistance. And now all of this, overhead sideways pattern as being supply to drive prices lower. So we start with that to see if it can break these lows. Sometimes these come down here, buyers step up again at major support aggressively, and these topping patterns can fail very badly. Sometimes it takes a few days. Remember, this day is just beginning, which is so far is just an inside day. And it's a good example of why we utilize the concept of breaking a prior day's low for a trigger. So this is a bullish move up. And it's not something that we want to utilize for a directional sell short pattern, because we want to respect the strength of what happened here. Now, this could pull back a decent amount, but the trend is up. The weekly trend is up, the monthly trend is up, and buyers can step up here. Even if it breaks here, they might step up here and, it just rips right back up again. However, these kind of extended patterns are really part of the bread and butter of bear call credit spreads, and especially stocks that are, higher probability, high beta stocks where the premiums, increase. And we got a couple of days to options expiration. So that type of a trading vehicle lends itself very well to a situation like this versus, trading directionally. It just doesn't, because it could just pop right back up again. If in 2020 hindsight, we could look at this and say, hey, look what happened. That was the top, and it, pulled back. And we just have to say, well, historically, that just isn't the kind of trade we want to do as a directional trade. But, to think that, hey, is it possible over the next couple of days that SPX or some pattern that looks something like this? And there are other patterns that look a little more bearish. They were larger red bars yesterday. You could say, hey, over the next 3 days, do you think it could stay below that area? That's a reasonable trade. As we say, trades are really nothing more than assessing the odds of a situation, and to say, hey, I think that's a good probability that prices could stay below a certain area. So as we look at different stocks, like we go and look at Tesla or any of the high beta ones, and see if there's some big premium. And a lot of times there are, because there's so much call buying on the way up that those premiums get jacked up higher. And that's kind of like, okay, who's going to be the sucker that grabs the the last chair or the hot potato, the musical chair thing, to sell those options up there. That in good probability is that they're going to expire worthless. So we come back to SPX and saying, well, what about today? That they're going to expire today? Will it stay below a certain level? Well, even though things have been going up like they have been, I'm surprised to see that the premiums are not jacked way up where, going up to say, 48.50 would have some premium. So last I looked, you got to do like 48.25. Let me just look again here. On the downside, looks like 47.35. 47.35 will go down. And yeah, 48.30. So let's clean this up. $48.30. I'm with you, McGraw. You're on host and panelist, but I'm with you. Yeah. I mean, this is bullish. And if it was to flip up in this market, I mean, we are talking today, but historically, the premiums have been higher where you could go above 48.50, and that would be very reasonable after this move. So 48.25, 30, it's just a little too tight for a comfort level. It's not a no-brainer. What is high beta, Norm? That's like saying, okay, the market is a beta of 1 flat. That's the market. And these stocks have a beta of 1.5 or 1 or 2. And so these high beta stocks, just calling the number 2, are twice as volatile as the broader market. So that's just something you could scan for. So in TC 2000, which Deanna and I show in MT Live, which is going to be today at 12 o'clock, within some of those scans, it says, hey, I want stocks with a high beta. I want things that move around. I don't want things that are, move less than the market. I want things that move greater than the market. And within some of the scans, I would say, I have written in there, okay, the average true range, and maybe some of the intradays, the 5-minute chart has an average true range of greater than $1. And so we can scan for high beta, we can scan for average true range, and we would add a certain criteria volume to say, look, I want things that move and I want things that are liquid. Things that don't meet that criteria, don't put them in the scan. I don't want to look at them. So this is good information that is really good for scans. As you know, we're not big on indicators. We don't use indicators. We don't sell indicators, but certain indicators like average true range, ADX, that can be a measure of trend strength or the lack thereof. Those type of things to utilize in formulas of scans are very helpful. So on the downside, what did I say, 47. Hold on. $47.30, which is not too much, $47.35. And now, so the thought of, hey, this is a turn day, it could come down more, and think, well, how far down could it come? What would be a reasonable thing? And 47.30 is all the way down here. It could go down there, but most of the time, the day after the turn day, it won't go down that far. But it could. It's a void. There's nothing to the left here to stop it. Yeah, there will be those people with their fib levels and their VWAPs and who knows, some kind of lines, market profiles, whatever. There's nothing there. Even a market profile isn't going to produce something with a point of control with a pattern like this. So going down to 47.30, it's reasonable. That would be a consideration. 48.25, I think you're asking for trouble. Well, it's more not necessarily move more than the market thing. It's just the measurement of how that stock or market moves relative to the market. Uh, it's more volatile, so it could move more than the market. Yes, but on any given day, things are going to do what they're going to do. So as we look at that information, right? Beta. Well, you could say, well, some other index that went up like this has a higher beta than the S&P 500. However, it's got 4 days up, wide range bar, and the probability is now that ranges are going to contract. So while that beta piece of information is helpful and is one piece of information based on the overall pattern and what the probability is of today, doesn't necessarily mean that that information is going to play out today. Right? Now, when we go and look at something like Tesla, and we see, hey, this is up a bunch. It stalled yesterday, and we could bring up, I could bring up a scan or a minder that would show beta, and we can compare that information and look at charts, and that would probably be helpful to making more sense. But say Tesla is more volatile than the S&P 500. Well, today it looks like it's going to be potentially quiet. Now, if it breaks this low, right, you can see where it's at here, 1097-ish. 1097 was up. It was up higher. It was at 1115, and now it's 1090. Now it's around here. It's about flat. So it's just been whipping back and forth there, trading inside of yesterday's range. But we've had these discussions in the green room in that, hey, something's coming down. We know it's in an area of support. It's going to make a turn, and it's one bar. Many times you say, and we like to have 2 bars where it's making the turn, and sometimes 2.5. And the reason for that is that enough trading data is formed on the hourly chart. Similarly here, as this begins to turn down, let's assume that this breaks the low today. And this breaks this, and maybe it comes back up again as it hits this unfilled gap. And now over the course, say we get into yesterday or tomorrow, today's bar will form here. You now have this data where on the hourly chart, we've got enough information that we can recognize a topping pattern. And this is the whole idea of a price void, in that the momentum move up, the time correction, it then begins to break. The little reference points to the left become less meaningful, and down it goes. So having a 2 or 3 day consolidation and then a move down is, and this is common sense, has greater probability of a move down than, say, a 1 bar turn, or sometimes prices break down below a green bar. And so yesterday could have been a break, down below the green bar, but hits support, pops back up again. It's part of what we talked about yesterday with retest patterns in the green room. I think, with Dan and I had a discussion. We covered some stuff with deep retracements. So, yeah. So let's keep going here. I don't want to hog all the time like I did yesterday. So Qs cleared these highs, more bullish price action. As you can see, they come down, they've broken the hourly trend and rolling over. They're at support here. And, buyers are here. Now we've got sellers here. And maybe it's an inside day, which is, kind of like stinks because nothing's moving much. I don't really know what's going to happen, but I see this holding here, and, it could come up and all be part of another day of consolidation here. Now, it's reasonable to think that this is going to pull back some amount because of, the rate of the 100% retracement and the strength of this move and, the void and all that. We'll just have to see how it plays out. Russell up at resistance. Right? Turn day yesterday was what we were expecting. We got it. Whip back and forth, and was kind of. I mentioned this in the room yesterday. It was maybe more in the S&Ps than here, but I mean the price action is kind of weird. It's weird in that here it made the nasty move down, right? The start of the move, and right away it starts to recover, and then the 1 5-minute bar that I pointed out, like a little mini crash on the 5-minute. Okay, it should go sideways and lower again, right? Nope. Grind back up, grind back up, grind back up. Little mini crash again, grind back up. So, this is odd type of price action, and that if sellers want to come in very aggressively, but then are scared to death and get out of the way, and buyers grind it back up again, and then it gets crushed again. So maybe all part of distribution, systematic distribution. We'll see. Dow, the strongest up there at resistance. So, we're seeing a lot of similar patterns and movement, lately, and it's not always the case, but up at resistance, inside day, move sideways. We'll see if it breaks or whether it holds up there. Bitcoin, it's trying to make a turn, can't do it. There's flip-flopping back and forth, so weak. Crude oil, up at the 50, we look to the left. There is some resistance there, so could be a little weakness there as well. And just interest rates starting to perk up a little bit there. We looked at this. I didn't want to do that. Where did it go there? That's just whipping back and forth the 3-month volatility index. It's down here pretty low. Would make sense for it to flip up again, but it certainly doesn't have to when it's been popping up from there. Our internals, hand it over to Dan. We do have a sell. These are on separate things here. So this is into 0.18. It is into the beginning of the upper bands, right? The lower of the upper bands. We have breadth up into this area here. And we certainly do have a pattern that supports some type of corrective pattern. But we do have to, respect the strength of the move up. But option traders have loaded up enough to where now they're going to start choking on them. And breadth has reached a historical extreme. So some kind of corrective pattern is certainly about to play out. Transports had a great move up into resistance. And we looked at oil, gold, just disappointing again. I don't know. And silver coming in. So I guess this is about bottoming patterns. Sometimes they really do really nicely and start a move, but it's really not unusual for them to, come back in and start over again. So there you have it. Well, yours, Dan.
Good morning. Yeah, we still have a bunch of open positions here. They're all fine. And we've been tightening stops yesterday because of everything Greg just talked about on the turn and the internals. So yeah, I don't expect many directionals unless they're on their own page. Like, look at this little CANF. This looks, I don't know what the heck got this going the other day. Short squeeze, Reddit boy toy, pump and dumper, who knows? But, deep retracement, nice little gap up here. We'll see what it can do in the first 30 minutes. Bitcoin, look at this ETF just getting killed. It's for it's down almost $6, and Bitcoin's, proportionally nowhere near that. And so I think this was the ETF somebody was saying yesterday about, oh, Dan, it sells for a discount to, 15% discount to, the Bitcoin, this and that. And I said, look, don't even begin to think that you're gonna, okay, this is amplify. Yeah, so this is a new block ETF, of course. But yeah, GBTC, okay. But anyway, the point remains the same. I said, don't even think that you're gonna sit there and print 15% arbitrage all day. I said, there's much smarter people in Chicago and New York that would be doing that if it were that simple. A Copo AMTX short. It's weak, it's down a lot. It's down a lot, but yeah, it looks lower. Short yesterday's low, stop yesterday's high. Would be tight. It's just getting on board a moving train. This thing, big gap, but no pattern. TSP, $40, big gap at the resistance, gapping over a red bar is bullish, but there's no pattern. Calm, 35.80. Wow, that's an ugly gap. Wow. That's what we call a bull trap. All the bulls in these last 3 bars. This actually was setting up to be a buy on a pullback, but now it's getting damage to the downside. BBIO, Chacopo. I have no idea what you're thinking on this pattern. It's definitely not a swing, but look at the volume that came in on this thing, and it sounds like a buyout. Only if it's set up as an intraday, but right now I have no bias. FCell, this was the only earnings. I was watching this as a potential bottoming pattern on yesterday's gap. I didn't know it had earnings today, but I took it off my interest list on the deep retracement. So here something's wrong at FCell. Here's an igniting bar yesterday, CPOP. It kind of flops around intraday, but it's worth watching. I'll put him in Roku's spot here. KWeb China ETF lower. That's a pretty big gap. That's a bearish trend on the weekly. Wow. Wow, look at that vertical. Now, remember we were talking about climactic cell setups, and somebody was asking, is the spiders one? And I said, no, it's incredibly strong controlled move. This is a Climo. It's when they get parabolic far from the 20, and then you got some type of bearish reversal. So, wow, look at that. That was a 105. And, that looks like an all-time low. No, close, but that's China. China's government comes out and you got risk on your hands. Pixie, wow, look at that afternoon. Well, not afternoon, noon. That was a noon breakout yesterday. But now that target would have been 140 or whatever. So that's gone too much. YOU, no pattern. BIAC, somebody mentioned this in the green room yesterday, and I said, I like it. It's still in a downtrend, but it's intelligent bottom fishing. This is what we call a bullish new low divergence. Look at this, lower lows, lower highs. Got it? So this is now a climactic buy setup. See how they get parabolic? And you really want to see on Climos the distance from the stock, from the issue to the 20 MA to accelerate like a rubber, like you pulling a rubber band back. And then look, it made a new low and didn't go very far. Now I got a bullish 1, 2, 3. So remember, detective, we were talking about alarms all day yesterday. So I got an alarm at 30.50, and yeah, I like them. Tesla, yeah, I heard on the news. Yeah, I saw Tesla at $20 this morning, and I'm like, oh no, yeah, because we have a call spread on it, but far away. I think the 1200s. So you know, even with it up, whatever, 10, 15 bucks, whatever it is, 10. That should not hurt us at all. Or, you know, I'll be curious to see at the open. 10 point against you, that the overnight time decay is probably going to outweigh that, because it expires Friday, 3 days to go, and it still has a long way to go. It has 101 points to go to get to 1200. So yeah, so detective, you tell us what the midpoint is at 935. You know, you got to let them settle down a little bit. The spreads. Disney, we're still in half lot. That's a very, very bullish 15-minute chart. Big trading range in the upper, you know, upper 80% of this wide range igniting. Beautiful weekly bottom, little bear sandwich. And TJX. TJX, somebody mentioned yesterday in the green room. That's on our long watch list. Adobe is on our call spread watch list. NOW. I forget if I looked yesterday or not. Wow, Q's starting out strong here. Merck up alarm. See, detective, remember we were talking about alarms on this one? And I said, let's see what it looks like if it gets above, you know, these overlap